Hey, this is Matt Furman with Core Group Resources, and this week's market update is really focusing on the expansion of the market. So really Q1, Q2 this year were a little bit murky, a little bit of fear of recession. That's since waned, and we're seeing the market slipping into a pretty fast expansion right now. And so a lot of those fears have waned out of the system, and we're seeing a lot of growth across multiple sectors. Power, oil and gas, manufacturing, warehousing, electrical. There's tons of opportunity in the United States for work. We are seeing, if on the government shutdown side, we're seeing a little bit of kind of turmoil there. Decision-making processes are slower. They just signed an extension, so that's going to keep things moving along. But I think we're still going to see a lot of turbulence on the government contracting side when it comes to the budget renewals and the politics that are going on up in DC. So if you put government aside and you focus on energy, transportation, manufacturing, it's still continued boom town in the labor markets. Overall markets, I think we're seeing continued growth, and we'll see that. Now in Europe, things have slowed down a little bit in Europe. And with some of the banking breakfasts I've gone to, there's a big talk about nearshoring in Mexico. So a lot of the investment that was going into China is now shifting to Mexico. So I think you're going to see a Mexican manufacturing boom occur over the next 5 years as we look to nearshore and really kind of condense the trade lanes. And I think that a lot of that's driven with the 20-foot and 40-foot TEU container rates that have been, gone from 3,000 container up to 18,000 a container. And it's since come down a little bit, but it's still overinflated. And so I think you're seeing a race to the cheaper transportation route, which is trucking from Mexico to the U.S. and then the labor costs in Mexico are more affordable and with the lower transportation. So nearshoring, Europe was a little bit slow, and there's still chaos obviously with Russia and China teaming up economically there. So you see kind of dual nearshoring happening with Mexico and the U.S., and then you see nearshoring happening with Russia and China. And so I think we'll continue to see this nearshoring effect that takes place between the United States and South America. That's going to continue to boom. And then oil, we're really bullish on oil and energy. I think it's our energy needs are continuing to grow. Electrical cars are choke pointed right now by lithium ion mining and just getting that out of the ground. So that's becoming a choke point, and a lot of these electrical car manufacturers are making cars that are way too expensive, and so the profitability is in question. And then parts too. So anytime you get with a new EV and you get rear-ended, well, guess what? It's pretty expensive to replace those bumpers, and so we're seeing a lot of people at scale question the EV side unless you're with a big manufacturer. So I think right now, all in all, the market's good and pretty positive about everything moving forward. So stay positive, get out there, find the work. It's right in front of you. Thanks.